Are you concerned about the possibility of a recession in Canada and its impact on your personal finances? Get the facts and discover valuable strategies for safeguarding your money by watching our video in full. Economists, market watchers, businesses, and everyday Canadians are all asking the same question lately as inflation and interest rates take a bite out of household finances. Are we headed for a recession? A majority of business owners and consumers are saying yes, according to surveys released this week from the Bank of Canada that show most respondents are reining in their spending ahead of a possible downturn. Also this week, financial advisory firm Deloitte said it's now forecasting a deeper recession than first expected as Canada's economy slows more drastically. Researchers at Deloitte are among a growing chorus of economists, including those at most big Canadian banks, expecting 2023 will see the economy take a hit. But for the sake of those without economics degrees, what is a recession anyways? And how does it affect Canadians and their finances? In this video, we will be diving into what a recession is, the causes of a recession, and how it affects Canadians and their finances. What is a recession? A recession is generally considered a decline in economic activity over a certain period of time. That's typically measured through gross domestic product, or GDP, the total value of goods and services a country produces. What matters for a recession, then, is not how well off Canadian households are, but how much business the country's companies are doing, though those two things are often connected. For a sense of what recessions can look like in Canada, take the 2008 financial crisis, which was tied to global market aftershocks from a housing and banking collapse in the United States. The value of Canada's oil and other exports dropped sharply. Housing activity in the country saw steep declines, and 400,000 Canadians lost their jobs over the course of a year, according to Statistics Canada data. More rare is an economic depression, which sees a much steeper decline in economic activity amid a recession lasting multiple years. Most economists are expecting a relatively mild or moderate recession in 2023 that would not extend for years. Causes of a recession: Canada's economy soared through much of the recovery from the COVID-19 pandemic, which spurred a recession at its onset in March 2020 as many sectors of the economy faced restriction. The national economy has been cooling in recent months, thanks at least in part to the Bank of Canada's efforts to tamp down inflation by hiking interest rates. In doing so, the central bank raises the cost of borrowing for Canadians and businesses alike, and discourages spending, which is one way to reduce demand and therefore take the pressure of prices. While the Bank of Canada has been eyeing a soft landing, the sweet spot where its rate hikes cool the economy and reduce inflation without triggering a recession, policymakers at the central bank have been clear they will do what they must to restore annual inflation to the target range of 1 to 3%. The Bank of Canada isn't the only central bank raising interest rates amid high global inflation, and forecasts for economic downturns elsewhere in the world are also expected to hurt Canada's business prospects abroad and south of the border in the United States, Deloitte noted. How does it affect Canadians and their finances? Randall Bartlett, Senior Director of Canadian Economics at Desjardins, says interest rates in Canada are now at levels last seen amid the 2008 recession. And while inflation is expected to keep cooling, it's still high, with wages growing but not keeping up with these two stifling forces. Bartlett says Canadians aren't able to spend as much, something that will slowly but surely weaken the country's domestic economy. Your dollars don't go as far as they did before, he tells Global News. All of these things together will weigh on economic activity going forward. And that's really what underpins our call for a recession in Canada. In a way, recessions can also be a self-fulfilling prophecy of sorts, according to Bartlett. With the majority of Canadians expecting a recession, they are more likely to reduce their spending and investments, which can in turn lead to a decline in economic activity. When it comes to household finances, recessions can be particularly devastating. As unemployment rates rise, many Canadians may find themselves out of work or facing reduced hours and wages. This can lead to a decline in consumer spending, which can further exacerbate the economic downturn. Additionally, with interest rates rising, Canadians may also find it harder to secure loans or mortgages, which can make it difficult for them to purchase a home or start a business. This can also lead to a decline in consumer spending, as Canadians are less likely to make big-ticket purchases during a recession. Furthermore, during a recession, businesses may also struggle to secure funding, which can lead to closures and layoffs. This can further exacerbate the downturn and lead to an increase in unemployment rates. To mitigate the effects of a recession, it is important for Canadians to have a solid savings plan in place. This can help to provide a buffer against job loss or reduced income during a recession. Additionally, it is important to keep your debt levels low, as high levels of debt can make it difficult to weather an economic downturn. It is also important for the government to have policies in place to support Canadians during a recession. This can include measures such as job retraining programs, unemployment benefits, and targeted stimulus spending to help boost economic activity. Recessions are a natural part of the economic cycle, but they can have a significant impact on Canadians and their finances. Understanding what a recession is and its causes can help Canadians to better prepare for the economic downturn. Additionally, by having a solid savings plan in place and keeping debt levels low, Canadians can better weather the effects of a recession. And with government policies in place to support Canadians during a recession, we can help to mitigate the effects of the downturn and promote economic recovery. It is important to note that there is no official confirmation of a recession in Canada in 2023, but it is important to be aware of the signs and to be prepared in case of one. It is also important to seek advice from professionals and to keep track of the economy and any updates. Thank you for watching. Your feedback is important to us. We would greatly appreciate it if you could take a moment to show your support by leaving a like and share your thoughts and insights on the topic by leaving a comment on this video.